A new stock rotation could just now be starting. What everybody saw today was the indexes up a little bit and they think, okay, great, that's wonderful. What very few people understand is that software stocks have been absolutely getting beat up for several months now, and those semiconductor stocks, in relative terms, have outperformed. Well, I think the opposite is about to happen. I think not necessarily that semiconductor stocks come down, but I think that the software stocks could start to outperform. Here's why that's important. While everybody is stuck in the past, as they usually are, it's called the recency bias. Everybody's stuck in the past. They love their semiconductor stocks. They could very well miss out on the opportunity to buy into some of their favorite software stocks at rock bottom prices because it's been so beat up over the last couple of months and miss out. What do you think happens? Please leave me a comment, like this video, and follow for more. Here is a weekly chart of software stocks relative to semiconductor stocks over the last several weeks. This is a weekly chart. And notice how when the chart is coming down, that here means that the semiconductor stocks are outperforming and the software stocks underperforming. Specifically, so you know what I'm using here, I'm using IGV as the software ETF and SOX as the semiconductor ETF. Now, I can't predict the future, anything can happen, but look how just today we have that green candle after getting really beat up in software over the last several months. I think it's absolutely possible for the software stocks to start to outperform on or about today. Again, not that necessarily semiconductors fall, but I think that because the software stocks are so beat up, I think they can start to outperform. If you would like me to manage your portfolio for you through times like this, comment manage. If you would like to receive my real-time stock trades, comment trades. This is not investment advice, and if you don't know me, I'm John Crocker, professional investor, proud American, cigar lover, and owner of Crocker Capital, LLC. As of 1:37 Eastern Time on the S&P 500, as I said could happen, we do continue to generally chop sideways. I'm a little bit surprised. We tend to be fractionally chopping higher instead of lower, so I think that's good news right there. Let's see how the market closes today. But if the S&P 500 does close above 6,836, that could be the next unconfirmed breakout that I am looking for. If we can close meaningfully higher tomorrow and confirm that breakout, wow. Remember how I was saying at this point when we get to short-term exuberance in the underlying stock market, and it always takes a break after that. And I was saying, do we chop sideways and then move up, or do we chop sideways and come down? I can't tell the future, but every day that we chop sideways and are chopping sideways to higher makes it even more possible that we do not get the dead cat bounce, do not get too much of a pullback. Some pullback is expected, but that the stock market heads off from here. So again, and all over again, all of the bears that are just now waking up, that sold at the bottom of the correction and are just coming out of that fearful hibernation, are seeing the stock market doing so well, seeing the S&P 500 relatively close to all-time highs. What do? They buy in high after selling low, a recipe for disaster. So congratulations if you're watching this channel. Again, possible bullish note here with a potential unconfirmed breakout. Assisting that breakout higher are lower yields. Here is the 10-year yield, a little lower than it was Friday. I'll take it. I am already in a long bond fund trade. If somebody has not in one yet, it was a little bit of a better opportunity when yields were higher this morning before they came back down. If you're not already in a long maturity bond fund trade to hop in, it's an okay time now. If you do it now, I would set a pretty close trailing stop sell order to protect yourself. The stock market is higher in the face of higher oil prices. Now, one day does not make a trend, and this has happened for a couple days randomly in the past where the market and the oil prices are disconnected. We shall see. Could also be a hint that the stock market thinks that Trump figures this out and opens up the Strait of Hormuz or gets a deal. In other words, that he is helping the situation to calm down and become better for the United States. I still do have that personally, that short oil trade on, and I don't think it's too late to short oil if you are not already short crude oil.